Good morning, Sean Butler with you here on Thursday, November 20th, 2008 at about 6:30 in the a.m. to share with you my thoughts on the economy both worldwide and here domestically in the United States over the past few days and, of course, looking ahead. As you know, I've been maintaining a short position in General Motors for the past few days, and General Motors, along with Ford and Chrysler, have been dominating news both in the major media and in the financial press over the past few days as the CEOs of those top three automakers in the United States have descended upon Capitol Hill to face, first on Tuesday, questioning from members of the Senate Banking Committee, and then on Wednesday, just yesterday that is, questions from members of the House Financial Services Committee. A lot of interesting nuggets coming out of both of these sessions, both of these hearings, but not, in my opinion, very much good news for stockholders of any of those three companies, or any of the two that are publicly traded anyway. I think that the CEOs really missed a big opportunity to be conciliatory and really step up to the plate for shareholders, workers, and the futures of their collective company. I was dismayed not only by the attitude of the three CEOs there, but also that of the president of the United Auto Workers Union, Mr. Rick Fettleman, who was present at both hearings on Tuesday and Wednesday. All four of the men, they seemed as if their attitude was they had already made all the concessions they could possibly make. They had done everything that they should do in order to move the companies forward towards profitability and future growth and sustainability. That's obviously not the case. There are a lot of changes that need to be made to get these companies competitive with international manufacturers who are manufacturing in the United States, cars that is, automotive manufacturers. I thought the point was illustrated no better time than on Tuesday when the junior senator, Republican from Tennessee, Mr. Bob Corker, started grilling all four men for a policy currently on the books, contractually arranged with all three companies and the Auto Workers Union, that forces the companies to pay workers at the plants which are idled, meaning that they're not producing anything and they're idled because of a lack of demand. They have to pay those workers. The corporations have to pay those workers 95% of what they would make otherwise for doing nothing. As Senator Corker pointed out, that doesn't take place in any other industry in the United States. That's something that has to go. On the corporate side, it was disgusting to see all three of the CEOs laugh almost, not take seriously questions about them altering their forms of compensation further. Not surprisingly, all three men flew in on corporate jets. After I did a little research, I saw that each of the companies owns multiple private jets. Each of the three owns more than 5 luxury jets which they use to ferry their executives around. In the case of Ford CEO Alan Mulally, he has a jet at his disposal as part of his contract, and he goes back and forth between his home in Seattle, his office in Detroit, and the headquarters of Ford there, obviously, and business across the country. I understand that sometimes private travel is essential to CEOs and to executives of such large companies, but when they are begging the United States for money, that's not acceptable. It costs $20,000, according to a source, which I can't identify right now, to fly the GM's private plane from Detroit to Washington. Completely unacceptable. Also, when the men were asked about potentially changing their compensation, they all said that they had already made concessions. They felt that they had already done enough. Mulally specifically noted that he thought he was, quote, good where I am as far as compensation. Obviously he is. He's making multi-million dollars a year, and he's begging the government to support that. They should not. But enough about the semantics here. When you look at this from a trader standpoint and trading standpoint, as of course you should, I think things really didn't go well for the automakers here in terms of picking up what they wanted when they went into Washington at the beginning of this week. You had a lot of frustrated, you may have had more frustrated legislators at the end of these hearings than you did at the beginning on both sides of the aisle. They're not eager to continue to give out money, the Republicans especially, and then the Democrats who really hold the cards on this The statements coming from the leadership indicate no action coming this week. They want to take their time with it as well. So not looking good for GM, not looking good for Ford. I'd short both of those stocks and ride them down. They're probably going to give up another 20-30% or so. Elsewhere yesterday in the market, I got caught up personally in trying to follow the momentum coming back up on the upswing. I bought the Dow very strongly at about, when it was down about 250 points. I thought it looked good when we came up, when we gained more than 100 points, but then unfortunately this is the problem of not being a professional trader. As I went away without closing the positions for an obligation that I had to meet, the market tanked and we're down below 8,000 now. That's huge. We're down below 8,000, and as I've been talking to the traders in my community, my friends, they all want to know if we're going to test the 2002 lows of 7,500. And when you think about it, we're not far from that at all. We've had sessions where we've lost more than 500 points in the past couple of weeks, past couple of months. We're one panicked session away from that. Do I think we're going to hit 7,500? Absolutely. Absolutely. As far as looking at today, Thursday's market will probably open up a little bit. We do have some economic news coming out, nothing terribly important. Jobless claims should be interesting, but I don't think it's going to shock anyone. I think, analyst consensus will probably be pretty close to right on there. It's continuing to get worse, and everybody knows that. That's going to be continued to get priced into the market. Things do not look good. If you open up the newspaper, or the web browser or whatever, it's bad news after bad news all over the place. Some of it's not directly financially linked, but when you get to the bottom of it, it's damaging the economy. So personally, after getting tangled up with that little error and trying to follow momentum, and you really shouldn't follow momentum. I shouldn't do it. It's not a good way to trade. It's easy to get caught up in, though. Couple that with a little bit of leverage that might have gone too far, and I lost about 5% yesterday. Not really too distressed about it. I lost 8% one day last week, only to make it up, in the following day to hit an all-time high for my portfolio. Looking ahead to today, all the world markets are down pretty significantly, and Dow and S&P futures, as well as those for the NASDAQ, are in the red this morning. So it looks pretty clear that we're going to open up negative. I don't know if we're going to move positive today. I would have thought at the end of yesterday's close that the market would find a way to rally and open up a little bit higher in a response to all the selling that took place at the end of yesterday's session. But it looks like we could be, heading straight down. I wouldn't be surprised if we had a mid to late day rally that showed some strength, but smart money is on a losing session today. With that said, I think it's dangerous and perhaps a little bit too late to take an all-out bearish view and just try to ride the market down on the indexes. We're still going to give up room, but we could have some big rally days in there that'll really hurt. So try to finesse it, move in and out throughout the day, hopefully not just following momentum, but on some news or event-driven stimulus. That's all I've got for today. I'll talk to you soon.